Welcome. In this video, we are going to analyze how many units do we need for XCN to make us rich. Don't forget to subscribe, like, and please watch till the end to understand.
But first, let's analyze the XCN. A descending channel pattern in technical analysis is an important chart formation where price movements oscillate between two parallel lines in a certain direction, usually indicating that the current trend is downward. In such formations, the line at the top generally acts as a resistance line, while the line at the bottom is considered a support line. The distance between the two lines determines the width of the channel and the volatility of price movements. In the situation you mentioned, the price being above the middle band of this descending channel can actually be interpreted as a sign of strengthening within the channel. This is because, in descending channels, the closer the price stays to the lower band, the stronger the selling pressure is understood to be, while moving above the middle band may indicate that buyers are starting to take some control. The middle band in a descending channel is usually an imaginary line running exactly halfway between these two parallel lines. Some traders match this middle line with moving averages to calculate it, while others simply take the exact midpoint of the upper and lower boundaries geometrically. A price that remains above the middle band and gains upward momentum can rise all the way to the upper band of the channel. This situation is considered an important opportunity signal for short-term traders because even within a downtrend, a move toward the upper band of the channel can mean a significant price increase. In the current scenario, the price being above the middle band suggests that buying pressure may be coming into play. This is important both technically and psychologically. Technically, breaking above the middle band can often be the first signal of a short-term trend change. Psychologically, when investors see closes above such levels, they begin to ask themselves, could the price break out of the downtrend? This question can gradually shift market expectations. When expectations change, trading volume can increase, new buyers may enter the market, and with this momentum, the price can move toward the upper band of the channel. Descending channels often reflect corrective movements in the market. In other words, after a long uptrend, the price may enter such a channel and fluctuate downward for a certain period. However, this does not necessarily mean the price will fall in the long term. Sometimes descending channels are short-term pauses within a larger uptrend. That's why staying above the middle band and moving toward the upper band can increase the potential for a breakout from the descending channel. Breaking the upper band is one of the strongest technical signals for the start of a new uptrend. Staying above the middle band also indicates that the price has escaped the selling pressure in the lower part of the channel. Areas near the lower band are typically where panic selling is intense and buyers act more cautiously. When the price moves above the middle band, the situation reverses. Buyers become bolder while sellers limit their selling, thinking the price is unlikely to fall much further. This shift contributes to short-term positive momentum in the market. Another important point is that a price above the middle band usually experiences small pullbacks on its way to the upper band. These pullbacks provide opportunities for new buyers to enter the market. In this way, the price approaches the upper band step by step. Once it reaches the upper band, the decision point begins. Either the price breaks this band strongly and a trend reversal starts, or selling pressure pushes it back toward the middle band. In the case you mentioned, if the price reaches the upper band, this would correspond to the peak point of the descending channel, which is a major resistance level. Therefore, once that level is reached, trading volume and market reactions should be closely monitored. If the upper band is broken with strong volume, this could mean the end of the downtrend and the start of a new uptrend. The targets after such a breakout are usually calculated by adding the width of the channel upward. For long-term investors, breaking such descending channels often presents major opportunities. When the channel is broken, the price usually moves upward quickly, and this movement can last not just for a few days, but for weeks. The reason is that a breakout from the channel triggers a significant psychological shift in the market. Sellers start to believe the price will not fall further, while buyers rush to enter the market before the train leaves. This surging demand pushes the price higher. The current situation with the price above the middle band suggests potential to reach the upper band. This is an attractive scenario, especially for short-term traders, because the move from the middle band to the upper band can offer substantial profit potential depending on the width of the channel. Completing this move can be a good profit opportunity even without a full breakout of the descending channel. However, once the upper band is reached, market reactions must be observed and whether the move will continue should be evaluated accordingly. But we can't make a decision based on the channel alone. So let's also take a look at other metrics. Keep watching.
Reaching the upper resistance in price is a highly critical situation in technical analysis because resistance levels are areas where the price has struggled to break through in the past and where selling pressure typically intensifies. In the scenario you mentioned, the fact that this upper resistance level corresponds to 10 cents as a price target makes it significant from both a psychological and technical perspective. Psychologically, round numbers like 10 cents form a clearer threshold in investors' minds. The human brain tends to remember these round levels easily and attach natural importance to them. Therefore, it's perfectly normal for market participants' attention to increase as the price approaches this level. From a technical standpoint, the 10 cents upper resistance may be a region that the price has tested and failed to break multiple times in the past. In such a case, this level becomes an area where sellers may re-enter the market. However, if the price manages to reach this point, it already indicates that buyers have gained significant strength recently. For the price to reach the upper resistance, it generally needs to break through several intermediate resistances, see an increase in buying volume, and experience a shift in market sentiment toward the positive side. Let's break down this scenario further. Suppose the price is currently below 10 cents, perhaps around 0.05 or 0.06. In this case, a move up to the upper resistance at 10 cents carries significant return potential for investors. This is especially attractive for short-term traders, as the approach toward resistance often comes with increased trading volume, more active market conditions, and higher volatility, creating both opportunities and risks. One of the main reasons resistance levels work is that investors who have sold at these price levels in the past may be inclined to sell again when the price returns to the same point. Additionally, some investors who previously bought at this level and incurred losses might sell when the price reaches this level again to exit at break-even. This increases selling pressure at resistance levels. However, if buyers are strong enough to absorb the selling pressure, meaning the price does not drop despite incoming sell orders and upward momentum continues, the resistance can be broken. In your example, the 0.10 level could be not only a resistance, but also the beginning of a major trend change. If the price manages to break this level, a situation called price discovery in technical analysis may occur. This means the price could move toward levels it hasn't reached for a long time or even ever. Such a breakout is often followed by faster and sharper upward movements. The 10 cents level is also an important psychological threshold in investors' minds. So as the price approaches this point, the topic tends to get more attention on social media, forums, and market commentary. This can generate additional demand. People begin to ask, where could it go from here? If there's supportive news flow, strong technical indicators, and rising trading volume, it wouldn't be surprising for the price to climb much higher after breaking this level. Of course, reaching 10 cents does not automatically mean the level will be broken. Most of the time, resistance levels are not overcome on the first attempt. The price may test this level once or several times, experiencing small pullbacks with each try. During this process, weaker hands may be shaken out, while stronger investors increase their positions. If buyers remain strong after this phase, the resistance will eventually break and a new wave of upward movement will begin. Another important factor to watch is whether the price maintains its momentum as it approaches 10 cents. Momentum refers to the speed and strength of the price movement. If the price approaches 10 cents weakly and with low volume, the likelihood of a sharp pullback from resistance increases. However, if it approaches with high volume, strong buying waves, and positive market sentiment, the probability of a breakout becomes much higher. In your scenario, if the price manages to climb from its current level to 10 cents, it would be both a technically strong move and a morale boost from a market psychology perspective. Such levels represent key points in past price action and serve as stepping stones toward future potential targets. For example, after breaking 10 cents, the next technical target could be 0.15 or even 0.20. For long-term investors, the 10 cents level is even more significant. Round resistance levels like this often signal potential long-term trend reversals. While short-term traders may try to profit from the move up to this level, long-term investors may aim to be part of the new trend that could form after breaking it. The impact of the price reaching 10 cents can vary depending on current market conditions. If the overall market is in an uptrend, this level could be broken more easily, and the price could rise much higher. But if the market is generally weak, this level could become a strong barrier that remains unbroken for some time. Therefore, when approaching such targets, it's important to consider not only technical levels, but also the broader market environment, news flow, and investor psychology. In summary, the price reaching the 10 cents upper resistance is a critical event from both a technical and psychological perspective. It's a test point that will measure the strength of the current trend. If this test is passed successfully, the price has the potential to climb much higher. If not, it may see a short-term pullback and enter a consolidation phase before trying again. This is why the 10 cents level should be seen not only as a target, but also a major decision point in the market.
Although the calculation here may seem quite simple, there is a significant financial logic behind it.
And when considered within a broader framework that includes investor psychology, it becomes quite compelling. In the example you provided, the target amount is $1 million, and to reach this target, the first step is dividing by the target price of 10 cents. When you divide $1 million by 10 cents, you get a total of 10 million coins. This means that if you hold 10 million coins and the price reaches 10 cents, your total asset value will be exactly $1 million. This simple mathematical calculation is one of the basic methods investors use when setting their targets. Let's expand on this logic a bit. Suppose the current coin price is 1 cent, and you want to acquire 10 million coins. In that case, the total investment required would be 10 million times $0.01, equaling $100,000. However, in your example, the target price is 10 cents, which is 10 times higher than the current price. Therefore, if you are able to acquire 10 million coins at today's lower price, when the price reaches the target, you achieve a 10-fold return. This is a perfect example of the X times return scenarios often sought in the cryptocurrency market. Another interesting aspect in your example is the motivation this calculation creates for the investor. The numbers are clear, concrete, and seem achievable. The human brain is more motivated by concrete and clear numbers than by vague goals. A straightforward formula, like 10 million coins times $0.1 equals $1 million, strengthens the investor's perception that this is possible. Moreover, this formula is highly practical when making an investment plan. For instance, an investor can set targets like, if the coin price reaches this level and I hold this many coins, my portfolio will be worth this much. Another factor to consider is whether the target price is realistic. Scenarios of sharp price increases in the cryptocurrency market are not uncommon. Particularly with new projects, hype periods, or major partnership announcements, it's possible for prices to multiply several times, or even tenfold. However, this is never guaranteed. Still, your target of 10 cents is psychologically significant for investors, because it is both a round number and a level that many consider to be achievable, yet wealth-generating. Let's consider the psychological aspect. When an investor knows they hold 10 million coins and believes the target price is 10 cents, they form a mental plan. The thought, if the price reaches the target, I will be wealthy, helps the investor remain patient through market fluctuations. Short-term drops seem minor compared to this larger goal. The investor maintains his position motivated by the long-term target. However, it's important that the investor does not become blindly attached to this target and also considers market realities. From an investment strategy perspective, such calculations are also critical in portfolio management. For example, an investor could diversify across multiple assets instead of focusing on a single coin to manage risk. But in your example, the sole focus is the 10-cent target price, so the investor structures his plan around reaching this price level. In this case, achieving this level provides not only financial gain, but also emotional satisfaction. This target represents a milestone the investor has patiently waited for, perhaps for months or even years. Mathematically, the calculation is entirely correct. $1 million divided by 10 cents equals 10 million coins. Then, 10 million coins times 10 cents equals $1 million. But from a financial planning perspective, one must look beyond these calculations. The key issue is how and over what time frame the price will reach this level. If the price rises rapidly, the investor might think it could go even higher and decide not to sell even when the target is reached. This can sometimes lead to missed gains. Additionally, such a scenario often interacts with social media and community influence. As the price approaches the target, these calculations are frequently shared among investors, with statements like 10 cents is coming soon spreading widely. This attracts new investors and accelerates fresh capital inflow, increasing the probability of the price reaching the target. This is a self-reinforcing cycle commonly observed in crypto markets. Another reason the 10-cent target is significant is that large investors, whales, also closely monitor such levels. Whales may realize profits as the price approaches these levels or support buying to help break the level. This is a factor that directly affects price movement. Finally, the phrase, "this could make us rich" in the investment world relies not just on numbers, but also on expectations. Yes, mathematically, 10 million coins times $0.1 equals $1 million. But the real issue are the market conditions required for this scenario, the investor's patience, risk management, and emotional discipline. If all these factors come together in harmony, such targets can move from mere theoretical calculations to achievable realities.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.